Let's go straight into it. If you trade for a prop firm and live in the US, there's one thing that can either save you a lot of money or cost you more than you expect. Taxes. Most traders don't think about them until it's too late. They take payouts, enjoy the cash, and then get hit with a surprise at the end of the year. So let's fix that right now. By the end of this video, you'll understand exactly how prop firm income is taxed in the US, what deductions you can use to reduce your bill, and how to structure things smarter. These are general rules, and the tax laws in your country may be different. Always check with your local tax authority or a tax professional for your specific case. All right, let's begin. When you trade for a prop firm, you're not an employee. You're an independent contractor. That means the firm doesn't send you a W-2 like a normal job would. Instead, your payouts are considered self-employed income. Some firms might issue a 1099 form, but most don't. They simply pay you through Wise, Deal, crypto, or bank transfer, and it's your responsibility to report that income. So here's the rule. Every payout you receive from a prop firm counts as taxable income in the US. Let's use a simple example. You trade a 100K funded account. You make 10% profit, which is 10K. The firm takes its share, let's say 20%, and you get 8K. You only pay taxes on the 8K you receive, not the 10K total. That's your income. Now, since this isn't capital gains, you can't use the 60-40 tax break that futures traders get when trading their own capital. You're not trading your money. You're trading the firm's money. The IRS treats that as normal business income. That means you'll pay ordinary income tax and self-employment tax on it, based on your total income for the year. If you have a job and you also trade, your prop firm earnings get added on top of your regular income. That's how your tax bracket is decided. The more you earn, the higher your rate. So that's the basic structure. You're an independent contractor. You receive business income, and you pay taxes on that income. Now, here's where things get interesting. Because if you're treated as a small business, you also get the right to deduct business expenses. This is what most new traders miss out on. They think taxes are only about paying, when in reality, smart traders use deductions to legally reduce how much they owe. Let's go through the most common deductions that prop traders can use. First, office expenses. This includes your desk, chair, monitor, keyboard, mouse, computer, and even your internet bill if it's used for trading. You can also deduct your phone and data plan, since most traders use them for verification, alerts, or communication related to trading. Second, trading-related expenses. Think about your TradingView subscription, charting software, data feeds, Discord groups, Telegram signals, or anything you pay monthly to help your trading business. If it's a tool that supports your trading, it's deductible. Third, education and training. If you buy trading courses, attend webinars, or join paid communities to improve your skills, those are considered professional development expenses. They count too. Fourth, challenge and evaluation fees. This one's important. Let's say you buy a 100K challenge for $550 and you fail it. That $550 is a business expense. It doesn't matter how long it took or why you failed. If you paid it to operate your trading business, it counts. Now, if you pass the challenge and the firm refunds the fee, that refund cancels the deduction. You can't deduct what you got back. Let's test that with a quick example. You buy a 100K challenge for $500. You pass, and the firm refunds your $500 after your first payout. In that case, no deduction because you got the money back. But if another firm gives you a bonus instead of a refund, let's say they pay you $560 as a reward, that $560 counts as income, not a refund. So you deduct the original $500 fee and you report $560 income. See how that works? It's all about understanding how each transaction connects. Now, let's talk about one of the most overlooked deductions, the home office deduction. If you trade from home and you use a specific space only for trading, you could deduct a portion of your home expenses. It doesn't have to be a full room, but it must be used exclusively for trading. You can't trade in your bedroom and then claim the whole room. It has to be a dedicated space. Let's say your trading setup takes up 10% of your home's total square footage. That means you can deduct 10% of expenses like rent, electricity, water, internet, and even repairs related to that area. It's not a massive deduction, but it adds up over time. And if you buy furniture like a chair or desk specifically for trading, that could be a full deduction. Next, let's talk about business travel. If you travel for trading purposes, like attending an event, meeting other traders, or visiting a trading conference, you could deduct travel costs, hotel stays, meals, and transportation as long as it's related to your trading business. Of course, you'll need receipts and documentation. This is where a lot of traders mess up. They don't keep records, and when tax time comes, they can't prove anything. Here's a simple tip. Create a separate folder on your computer or phone just for your trading receipts. Every time you buy something for trading, snap a picture and store it there. When tax season arrives, you'll be ready in minutes. Now, let's look at how all of this fits together in real numbers. Imagine you made $8,000 in total payouts from your prop firms this year. That's your income. Now, your expenses were $550 for a challenge, $300 for TradingView and other software, $200 for internet and phone usage related to trading, $100 for a desk chair. That's $1,150 total expenses. Your taxable income becomes $8,000 minus $1,150, which equals $6,850. That's what you'll be taxed on. Simple, right? So, even if you can't avoid taxes, you can at least reduce how much of your payout gets taxed. If you're serious about prop trading, it might also be worth setting up a business entity, like an LLC or an S corporation. This is not required, but it can bring benefits depending on your situation. As an LLC, you can separate your personal and business finances, which makes accounting and deductions cleaner. With an S corp, you may also reduce self-employment taxes if your profits grow larger, but you'll need professional help for that setup. It's not worth doing just for small payouts. However, once you start making consistent income, it's a good step to explore. Just make sure the person helping you understands trading income, because not all accountants do. By the way, if you want to see the best prop firms available for U.S. traders, check out the link in the pinned comment. You'll find the top firms, the latest reviews, and promo codes that can save you money and also help support the channel. And while you're there, make sure to like this video and subscribe to the channel. That's the best way to keep this kind of value coming your way. Now, here's something that often confuses traders. They ask, if I trade futures, can I use the 60-40 capital gains rule? The answer depends on whose money you're trading. If you're trading your own futures account, yes, you can use the 60-40 rule. That means 60% of your gains are taxed as long-term capital gains and 40% as short-term. That's a big advantage. But if you're trading a prop firm's futures account, the rule doesn't apply. You're trading their money, not yours. So it's taxed as ordinary income. That distinction is huge, and it's one of the main reasons prop traders need to understand the tax side early. Let's go back to deductions for a second. There's another category people forget: startup costs. If you built your trading setup before you started earning, those costs can still count. For example, if you built a new PC last year but only started trading this year, that PC can still be written off as a startup expense. The IRS allows you to go back and deduct certain initial costs when you begin your business. It's one of the few retroactive deductions you can legally use. Another quick but powerful tip: if you pay for trading software or subscriptions on a monthly basis, always keep the invoices. Many traders pay with crypto or foreign processors, And those transactions are hard to trace. Without proof, you lose the deduction. So whether you pay through PayPal, Wise, or directly on a website, keep a digital record of everything. Now, you might be wondering, do I need to form a company before I start trading? No, you don't. When you start trading with a prop firm, the IRS automatically considers you a sole proprietor. That means you can already deduct expenses and file taxes without forming an LLC. The LLC just gives you extra structure later on. Think of it as a tool for organization and protection, not a requirement. Let's summarize the logic of all this in a clear way. 1. Your payouts are income. 2. You can deduct any necessary expense related to that income. 3. Keep documentation for every transaction. 4. File taxes as a self-employed individual unless you've created a business entity. 5. Always confirm your situation with a professional before filing. If you follow these 5 principles, you'll avoid 90% of the headaches most prop traders face when tax season arrives. There's one last mindset shift I want to share before we wrap up. Don't look at taxes as a punishment. See them as part of running a real business. When you treat your trading like a business, the results follow. You'll be more disciplined, more organized, and more aware of how your money flows. When you trade like a hobbyist, you get hobby results. When you trade like a business owner, you get business rewards. So track your payouts. Track your expenses. Track everything. That habit alone can put you ahead of most traders. If you got value from this video, remember to like it and subscribe for more practical guides for prop traders. And again, if you want to see the best prop firms for US, the link with promo codes is in the pinned comment. It supports the channel and saves you money at the same time. These rules can change at any time, so always stay updated with your local tax authorities or a professional accountant who understands trading income. Thanks for watching, and I'll see you in the next one.